Hi, good afternoon. Eric Mashinsky with the Gold Investment Letter here today with Don Lay, CEO of Medallion Resources. I thought it would be appropriate for us to get an update. The company's had some movement as of late, and as or more importantly, we've seen some interesting activity in the rare earth space. And this is after years of a beating in this sector and an expunging of the operating and surviving public and private companies that are in the space. Medallion is one of a few. And so thought it'd be a great day for Don to show us some data that's been coming up as of late. Welcome, Don. How are you?
I'm great, Eric. Thanks for having me.
You bet. So I'm just going to let you have at it here. We've got some charts that you've kindly provided. Why don't you tell us what's going on in the rare earth sector?
Sure, for sure. So it's been really interesting, Eric. For about, I would say, 2 years, it's been kind of clear that it's the rare earth permanent magnet space that's really been driving the demand for the rare earths. And by the prices of neodymium and praseodymium in particular have stayed relatively strong, even though the rare earth market has sold off dramatically. So that's really been the saving grace and also the driver of the industry is this permanent rare earth magnet area. And the prices have been, have stayed strong, as I mentioned, but relatively flat. And what's happened just recently, and by recently I mean like within the last 2-3 months, is the price of the two key magnetic rare earth elements, that's neodymium and praseodymium, that are used in virtually every permanent rare earth magnet, have started to take off. And in front of us now is a slide from the deck that Linus put out a few weeks back when it reported on its most recently quarterly numbers. So Linus, just to remind everybody, is the only really significant rare earth producer outside of China. It's got a big mining operation in Australia, and it processes its rare earths in Malaysia. And Linus is, as you can see here, it's a big company. It was one of two big companies that got into the rare earth business in the bubble that happened between 2009 and 2012. The other company was Molycorp. Molycorp went into bankruptcy and was recently sold off and is no longer operating its mine in Mountain Pass, California. But Linus went through the tough times, and it's now producing 22,000 tons of rare earths a year, which is a significant amount. And like I said, it's the only really big producer outside of China and the world's second biggest rare earth producer in total. So it's a big chunk of the rare earth production. And what's interesting about this chart here, as you can see, is the price. This is the domestic price. By domestic, it's the internal Chinese price for rare earths in rare earth oxides, NdPr, which is neodymium praseodymium oxide that's sold in China. And the principal use of this is to go into rare earth permanent magnets. Rare earth permanent magnets, just so everybody understands, are used wherever you need a really strong and light magnet. So that's in certain types of electric motors, like those that would go in your automobile, to move your windows up and down. It's also got other emerging uses in the electric vehicle, hybrid vehicle market. They're used in wind turbines and a number of other things, robotics. So everywhere you need a really strong permanent magnet, it's typically a rare earth magnet today. So what's really interesting is this price point has really taken off here, and Linus made a point of drawing their investors' attention to it because Linus, I would expect somewhere between 75 and 85% of their revenue would be driven off of the pricing out of the NdPr market itself. So that's an important thing and a touchstone. From Medallion's perspective, it's quite exciting for us because we basically have the same distribution of rare earths in our proposed operations as Linus has in theirs, and that's monazite, which is the rare earth phosphate mineral that we look to produce. So this is kind of, if you will, our biggest comparable here. So what also happened, which is what I'd like you to do, Eric, if you wouldn't mind now, is just to flip to the Adamus presentation here, and that would be slides. Start with slide 12, if you would. So when Linus announced their results in a few weeks back, there was an interview with the managing director of Linus. Her name is Amanda Lacaze, and she made a point with respect to the increased demand for rare earth magnets, and hence neodymium and praseodymium, influenced by the electric vehicle market here. And she was referring, in effect, to a presentation, a rare earth presentation that was given by Adamas Intelligence in Greece a few weeks back. And what this chart shows here is the increased demands for neodymium praseodymium for the electrical vehicle market. And the numbers are actually are staggering. So the market is going to need another 40,000 tons over the next 10 years here for the electric vehicle market. And this is in a neodymium market, neodymium praseodymium market that would only be about 25,000 tons today. So it's in effect two and a half times the size of the current marketplace. And the numbers here you see, 5,200 tons per year in 2024, as Adamas points out, is equal to one full annual production of Mount Weld mine. That's the Linus mine in Australia. So in effect, what's being projected here, and this is just given the industry projections for NdPr demand, neodymium praseodymium oxide demand, is that a new Linus facility would be required to fulfill that marketplace every year by 2024. Well, it's staggering to mention, but Linus took about 10 years to get into production and about $1.5 billion Australian dollars to get there. So creating a brand new Linus in terms of production every year is impossible. As you can see, these numbers are ramping up. And this is just the electric vehicle market. Obviously, hybrid vehicles have electric motors as well. Robotics is a big driver, as well as wind turbines. And if you flip to the next chart, Eric, slide 13. Yeah, so this is exactly the same statistics, but it's represented in number of new Linus mines that would be required to fulfill that production for electric vehicle marketplace. So right now we would need about, given the current demands, another 0.4 Linuses, but as you can see, it keeps ramping up to get to that number. So right now we need about a Linus every 3 or 4 years or 5 years, but now it'll shortly be becoming a lot more dramatic. So this change in the rare earth marketplace has been long expected, and now the inflection point, it looks like, is finally hit in terms of this expectations. It's bode very well for Linus as a company and as a stock price. They've rebounded smartly. And maybe if you could flip to the Linus stock price. So this is its principal exchanges in Australia, but this is the OTC of Linus. As you can see, just the last couple of months here, it's ticked up strongly after about 3 years of bouncing around. So this is a very recent phenomena that the market's just woken up to, and it's trading big volumes on the Australian Stock Exchange, its main board, and it's doing very well. This is the other really important chart to notice, Eric. This is a chart of China Northern Rare Earth Company, and this is really represents the biggest producer in China. It's out of northern China, Baotao, and it produces not only NdPr oxide, but it also makes the magnet material itself. So it's got a fully integrated permanent rare earth magnet producing value chain, and it's really the dominant producer globally in that area. And as you can see, it's really there's been a big inflection point here the last few months as well, and since basically April, and it's really reflected in both the stock price and in large volumes. It's important to note this is a big company too. This is the world's biggest rare earth producer, and they've got the entire value chain, or most of the value chain. It's about a $10 billion US market cap company. So this is a big company, trades on the Shanghai board, and is really a significant player in the industry globally. And so these moves are very significant, and I wouldn't be going out of my way to say it's really been driven by this rare earth magnet marketplace. So it's quite exciting times, and Medallion is well exposed to this sector as well.
So, Don, thanks for that. I think it's really important to put this on everybody's radar now. I mean, this move is it's big, and it's really, I don't think it's on anybody's radar. I mean, this is how this stuff works, right? You have the initial bubble. We saw this with the internet stocks too. It's similar with rare earths, and I mean, really any of these different cyclical markets as it pertains to the initial glimpse into the window is when investors get excited and see this massive potential, and things start to react and overreact and go too high and then fall and crash and leave in tatters the sector, which had too much froth, too many startups, too many illegitimate projects or business models, comes down, crashes out for a long period of time, for years, and frustrates all the investors. They get out at a loss. But what they saw in the window initially is actually reality. It just takes time for it to kick in. So now is when we're coming in my opinion, to the real rare earth dominant demand marketplace with all the different technological drivers in our life today. And so this, to me, I think is probably going to be a very sustainable move on this next run, and could last a very, very long time. So how does this all bode for Medallion Resources, which a lot of our listeners already own and are invested in? How does this affect what you're going to be doing, and what are you going to be doing going forward? Where's your value proposition?
Right. So Eric, for many years we've been working on a rare earth business model that's not related to having a property or a mine or a potential mine to get up and process. This is we think ultimately turns out to be a huge advantage. So our business model involves not sorting out, doing all the drilling, and hence the metallurgy and the large capital expense and all the rest of that. Rather, it's buying a rare earth mineral that's available in reasonably good quantities from another mining industry. I'll talk about that in a minute. Taking that mineral and processing it and extracting a rare earth concentrate from that, a chemical concentrate of all the rare earths, and then marketing that. So it's really an intermediary spot in the value chain. It's something that can be done at low capex and low opex to actually to solve a problem in the rare earth business here. The mineral we're buying is something called monazite, and it's available from heavy mineral sands miners. And they're available, those companies mine beaches in effect for the titanium and zircon all around the world. Africa, Australia, Brazil, and even in the southeast of the United States. So we've focused on, in the short run, in terms of getting to production, working on a North American acquisition of monazite. We're working with suppliers that we can buy monazite from today, and look to get some of those arrangements completed shortly. We're doing our metallurgical test from that monazite in Saskatchewan at the Research Council there, and look to put in North America a rare earth extraction plant using this byproduct mineral. In June, we announced an agreement with a company called Rare Earth Salts based in Nebraska. They've got a rare earth separation facility there, the only operating one in North America at the moment, and they're separating phosphor material. But we've done an agreement with them to cooperate, supply them our rare earth concentrate. They'll separate those rare earths into the individual marketable oxides and sell them off into the marketplace. So it's really initially on a small scale, somewhere between 500 and 3,000 tons per year, getting into rare earth production in North America, and thereafter expanding to other marketplaces where there's large quantities of monazite available for processing. And the really exciting thing is monazite has a great distribution of rare earths, so we get terrific exposure to this neodymium and praseodymium rare earth permanent magnet elements. So that's really kind of the upside here. And to your point of a little bit earlier, is there's very few companies left in this space. We've managed to survive, get through the tough times, move our business model forward, not quite as quickly as I'd hoped, but we're in a terrific position now to take advantage of it with this upturn in prices. So that's kind of the spot we're in, and why I wanted you to get this get this message out to our shareholders.
Appreciate that, Don. We're going to wrap up to make this a pretty brief call, so people can just take the time out of their day and get this update. But one last thing I want to ask you. So talk to us, because I actually think that, you know, years ago when we were looking at this process with Medallion, and, you know, there were some elements with the Middle East, and it was a big project, just wasn't palatable for where the market was. And now you've scaled that back, I think, to a very realistic model. Just to summarize, let's talk about economics for Medallion if you get to the point anywhere from the 500 tons per year to 2,500 or 300 or 3,000 tons per year, just with the rare earth salts group. What kind of revenue and profitability would that mean for Medallion? And then I know you're doing work on it, but give us some ballpark numbers on actually getting this facility up and running on your end so that you can bring this separation technology into the marketplace and start to produce more concentrate. Call it, you know, also tell us a little bit on the timeline. I was going to say 2018, that might be a little bit early, but give us some economics, color on the production costs for you, the revenues, and the whole enchilada, please, and then we'll wrap it up.
Yeah, so I have to be a little bit careful about specific numbers that I provide in kind of a public forum, Eric. But what I can say is that like Linus's production, they're doing 22,000 tons a year, and their capex was $1.6 billion. You know, they'd probably admit that was way too high. But I don't have any problem to say for just only a few tens of millions of dollars, we can get to this 3,000 tons per year of production capability here in North America. So a fraction of it, and once you're in production, that's gold. So in addition, because we're buying a byproduct mineral from somebody else, and it's a waste product for them, and slightly radioactive waste product in effect, because there's thorium and a little bit of uranium in the monazite. It's got to be handled and treated well. We're helping them out and to get rid of this material. So the numbers that it can be done at have substantial margins in them, and of course, and even when rare earth prices were as low as they got, say 18 months ago or something like that, we were still profitable in our estimates on this project. Those numbers have gone up significantly since that point in time, and you know, in the very high IRR return in terms of our estimates right now. Of course, final numbers are going to have to be sorted out once we've finished our metallurgy and have exact numbers on it, but I've got no qualms in saying it can be very, very profitable. And I think Linus upturn, because they're in effect a hard rock monazite miner and producer, we can replicate and do much, in fact, probably much better than them over time. So we're in a terrific position to take advantage of it. In terms of the news flow, really our next steps really are to complete these monazite agreements, finish off the metallurgical work that we've started with in Saskatchewan, and that should be completed by the end of the year. And then we'll be in a position to get some final economics. And then given the demand side from our partner at Rare Earth Salts, we'll know exactly what size plant to propose and get funding for at that point in time.
Cool, Don. One last thing before we wrap up, you can keep it brief, but the actual facility to get started, you know, you said several or a few tens of millions, but is there a way for, I mean, I think you're referring to getting this thing up to a level of scale to get started at producing revenue and actually shipping concentrate, even if it's on the low end, 500 tons per year. Can you do that for, you know, theoretically, I know you need to do some numbers, between say $5 and $10 million, or around 10 million or less? Is it possible to get into business even at that level and then sort of build from there on your capacity?
Our current estimates suggest we could certainly do it for those kind of numbers. Yeah.
Beautiful. Don, thanks for the update today. Exciting stuff finally happened in the rare earths. We'll distribute this today to our premium group and tomorrow to our free shareholders. And for all of you listening, I think if you're new looking at Medallion, this is a tremendous time to be taking a close look at Medallion and just the rare earth sector. It's a very contrarian play. It's early in the contrarian play, but we've got some big movement that has started, which has not reflected in some of the few small miners like Medallion yet. But this type of a move typically trickles down to the juniors. And so we also have Dom's got a small private placement open. I'll make some comments on that within my email for those of you that might be interested in getting squeezed in. But really like this company and what Don's doing, and we'll have updates as we move along. So thanks, Don.
Thank you, Eric. Appreciate it.
Ciao.